Okay, hello everybody. I'm Jordi from the Royco team, and today we are on our second podcast, and we have a special guest, Mike Massari from the RedStone team. How are you, Mike?
Nice to see you. I am doing great. Thank you so much for having me.
And we also have Shiv from our Royco engineering team. How are you, Shiv?
Doing wonderful. Thanks, Jordy, for hosting.
Awesome, awesome. First of all, I would love Mike to introduce yourself, talk a bit about you, a bit about Redstone, and then when we finish that, we can start talking about oracles and everything regarding this.
Yeah, sounds great. I am Mike Massari. I am head of partnership at RedStone. RedStone, as you probably know, is the fastest growing blockchain oracle. We are present on over 70 chains. We secure about $5 billion in value across hundreds of feeds and hundreds of assets.
That's awesome. I will start with an easy question for you, but I think this is something fundamental that everybody has to know. So yeah, what is an oracle and why does DeFi need them?
Very interesting question because something that maybe outside of DeFi people don't know as well. But effectively, an oracle is, like the name sounds, an entity that determines and communicates to the different chains what is the correct price of different assets. These prices are calculated in different ways for different assets, but ultimately there is the need of removing trust and a trust element from the price that you see on chain. So for example, when somebody goes to a centralized exchange and they want to look up the price of Bitcoin today, that price should not be determined by a single exchange. Otherwise, you risk finding yourself in the situation where you have so many different prices and not everyone is aligned, and therefore there could be potentially exploits in buying maybe from one side of one exchange and then selling to a different one. An oracle removes this problem and effectively communicates to the different blockchains a unique price that is the result, most of the time, of the consensus of multiple sources so that this price can be as accurate and as reliable as possible. On top of that, the role of an oracle is to communicate this price in a secure and in a timely way. So the prices obviously change over time. So it's very important that the prices are as up to date as possible for the specific moment in which any transaction happens. So whenever an oracle communicates a price, usually we have a heartbeat of a deviation threshold, where if the price is X seconds or X minutes old, or if the price deviates from the old price that is communicated to the chain by a certain percentage, there another price gets put to the chain and the data feed, we call it, gets updated.
Thank you so much for this explanation. I think it was super clarifying. And now, as I know Sheep is also super familiar with oracles, I will ask him about different kind of oracles because we have market oracles, but we also have fundamental oracles. So yeah, I would love you to please explain the difference between them and why we are using fundamental oracles on Royco, because we want to talk about oracles, but especially oracles in Royco.
Yeah, so you nailed it. There's two different classes of oracles, market oracles and fundamental oracles. Market oracles, as the name, kind of communicates, basically price an asset or whatever is being relayed on chain for the price feed using the market price of the asset, right? So that could be a spot price. Obviously, that could be subject to manipulation if you're using a single data source in that oracle, or it could be something like a TWAP or a VWAP, which is usually more common for these market feeds, right? And then vice versa, you have these fundamental oracles which don't rely on the market price, and these work a lot better for any asset that actually has a balance sheet, right? So if you have a backing, if you have reserves, and the price of the asset is actually based on its solvency, right? Then a fundamental feed is a lot more accurate and not subject to minor wicks and volatility in the market price of that asset. So to answer your second question, the reason why we use fundamental feeds in Royco is because we're a risk-tranching protocol, right? We're a platform that basically perpetually executes these obligations from our senior tranche to junior tranche and vice versa, based on the price of the asset, the underlying asset that we're tranching. So if we were relying on a market oracle, right, that means that number one, it is subject to manipulation, but number two, it's not actually communicating with a high degree of fidelity what the actual fundamental backing of that asset is worth, right? So we have to use a fundamental feed in order to make sure that the risk premium that the senior tranche is paying to the junior tranche and the coverage obligations that the junior tranche is meeting is based on the actual value of the balance sheet of the underlying asset.
Super clarifying as well. Also, you already talked about it. There can be errors, and that's why Mike talked about how to update this Oracle data. But as you know, the DeFi space now, it's a bit weird. We've seen lots of hacks, we've seen lots of problems, and sometimes we see on those posts on X, the Oracle was wrong. Okay, so yeah, I wanted to know, Mike, how much of that is really the Oracle, or how much of that is really the protocol picking a bad Oracle or doing bad practices?
Obviously, it's difficult to answer this and that is a blanket statement, right? Because each individual hack or exploits is, its own monster and happens for its own reasons. So very, very difficult to give one single answer. But I think an interesting angle to approach this is to talk a little bit about what an oracle should provide. And so, as I said before, there is the reliability aspect and the security aspect, which is fundamental in an oracle. So obviously, like in any business, there are people that do this business very, very well and have a very, very good track record of security and reliability. At RedStone, we are very, very proud of that. It's something that we put front and center as P0 always. We never had any mispricing event, any downtime since we started in 2021. So very important for us to provide reliable and accurate price data. There are also people sometimes, like in any business, that don't do it as well. Most of the time, the problems are not necessarily within the Oracle, but maybe they are within the sources or within the algorithm or how the Oracle calculates the price, or maybe some sources are not available and the price is not up to date enough. So there is multiple variations on when this happens. The recent hacks that we saw, we're recording this as of May 2026. So the recent hacks were mostly on the operational security side. So the Oracle space didn't have a huge, mispricing like a Black Monday event in a little bit. But that is a reminder even more for us on top of our game as much as possible. We need to make sure that every single price that we provide is up to date, is reliable, comes from reputable sources, and is the least prone to manipulation that it can possibly be. So there is the underlying paradigm, I would say, of any Oracle business. I would encourage asset issuers and everyone that requires a price on chain to use reputable oracles, for sure, in the same way that as a business, anybody should use reputable vendors. Ultimately, these mistakes, they generate a lot of reputational damage when they happen, and especially investors, when they see that an asset is being compromised, they most of the time don't go even too deep on understanding why, what was the reason, and when, like, this is more of like technical things that we care about. But if something is wrong, it's wrong at the end of the day. So the trust in that specific oracle, in that specific asset, goes down inevitably. This is also why we keep it super P0 at all times.
Thank you so much. As I talked to you before, this is also a talk for me to understand things, because I'm not super familiar with the Oracle things. So yeah, I've seen that in Royco, as we are using lots of different tranches, we are operating many markets, we've been building also, or asking for, custom fundamental feeds. I also want to know where the data comes from for these specific markets, how can we check this data, and all these things. So please, Shiv, if you can give us more info about that, it would be amazing.
Yeah, so the fundamental feed effectively represent an estimate of the fair market value of an asset, which is based on its exchange rate to other asset or to the underlying reserve, as Shiv was saying. So the data comes from the underlying reserve. We do have different kinds of fundamental fees if we want to get a little bit more technical. So we have, for example, contract rate fees, which are also known as exchange rate, or what we call internally also fundamental fee, which is effectively the ratio between the underlying asset and its derivative, which comes directly from the smart contract of a protocol. Think about, WST8 and ST8, right, which is derived directly from the Lido contract, or WE8 and E8, which is derived from the EDFI contract. You have a second type of fundamental feed, which is called NAV feed, so net asset value feed, and that is usually based on an institutional API. So CESR, for example, or SOFR are a good example of this, where you have an API that hacks off-chain and then creates the value of the specific product, and asset issuer, they issue token against that, against the value of that off-chain product. And finally, you have proof of reserve, which is usually a custom implementation logic that monitors the on and off-chain reserve of a specific asset and then calculates the price based on that and transmits the price based on that. So there is different aspects, but ultimately, as she was saying, the fundamental feed is just a feed that represents the value of something based on the exchange rate with another asset or underlying reserves of that.
Awesome. Do you want to add something on it, Shiv?
No, I think Mike nailed all three subvariants of fundamental price feeds. I do want to note that the actual correctness of the backing data that's reported, the state of the balance sheet, is dependent on who's providing this feed, right? So, and not the one that's actually providing it to the blockchain, like for example, RedStone or Chainlink, but rather the party that is going and auditing the reserves, or basically providing that data on the proof of solvency, because that can be gamed, right? And it is based on trust. And there are certain, measures that you can take to make it higher fidelity, right? And more transparent. But at the end of the day, that is a point of failure, where if the actual reserves and their values being misreported, then there's nothing that RedStone, for example, can do about it.
Yeah, so at the end of the day, when you operate an information or data business, you always have a stake in the game on the data that you provide, right? Regardless of where the data comes from. Ultimately, we are the people that put the data on chain, so we need to make sure that we do the best job that we possibly can to make sure that the data is accurate. What you say is right. Obviously, in certain specific fundamental feed scenarios, you introduce points of failure, because the data can be manipulated. There can be like an operational security hack or whatever it is that makes it so that data that eventually gets into the Oracle, so the source data, it's incorrect, and therefore it could create a cascade of events. We do have guardrails in place that look for certain, indicators that we deem to be red flags effectively, and stop the process. So usually what happens in those scenarios is that the checks pick up something that is not correct, or something that we deem not particularly accurate, and the process gets stopped so that the data doesn't get to the chain. Ultimately, RedStone definitely puts a degree of effort into making sure that the data that we provide is as accurate as possible, even if, as you said correctly, Shiv, ultimately the source is origin of the information, of the data. But as an Oracle, we do take very, very good care in making sure that the origin is as accurate as possible and is checked as thoroughly as possible.
Awesome. I had two questions related to that. I don't know if after these questions you will know, or you will want to add anything else about this, but what does an Oracle not do? because we are talking about lots of things, taking data from wherever, but where are the limits where an oracle cannot go? And also, what happens if a fundamental oracle gets something wrong? Because you said we have guardrails, and I'm sure you're taking data from many things at the same time. But yeah, wanted to know about it.
Well, there's many things that oracles don't do. At the end of the day, the way that I would encourage, and I encourage everyone to see an oracle, is just a trust minimized validation, on a specific price in this specific thing. Obviously, nowadays oracles do much more than just providing data on chain. This is something that it's a little bit of an old definition. Obviously, for the purpose of this conversation, we're focusing a lot on it. But for example, in RedStone, we have liquidation infrastructure, we have settlement infrastructure for RWA, we have risk assessment and risk rating on different assets and different vaults. So there is a number of things that Oracle do, especially nowadays. So I do see where the question comes from. Obviously, there are limitations. Ultimately, the Oracle is a provider of data and a provider of infrastructure. Anything that is not infrastructure or data, it's outside of the scope. For example, the easiest thing that comes to mind is that we do not dictate the price of a certain asset. Like what we do is we communicate the price of a certain asset, we calculate it, but we are not influencing the price in any way. We don't have any control on the price of Bitcoin, for example, or anything like that. Differently from what some people think that obviously blockchain was born to begin with to just reduce the trust and reduce the opportunity of manipulation of a certain price by single entities, and oracles are no exception. So the role of the oracle when it comes to price feed is a role of security, communication, calculation, but it's not a role of determining.
Yeah, I think the way I like to think about it is that the Oracle problem is like an age-old problem in this industry, right? And I used to be at Chainlink back when I was at college, and the way that we used to think about this is that look, the Oracle at the end of the day is just trying to aggregate data from many non-deterministic sources and posting it onto a ledger that operates in a deterministic manner, right? So all of these sources, whether that's a NAV provider or price feeds from exchanges, whatever they might be, are running in these pretty open, non-deterministic systems in the sense that people can manipulate them, right? It's not the actual blockchain itself where you have like actual ways of verifying the end state given an initial state and a set of transactions or inputs to apply to it. So it is a very difficult problem to go and solve fully, right? But as Mike said, the Oracle networks itself or Oracle infrastructure providers themselves can take precautions, right, to try and almost mimic the blockchain's fault tolerance off chain, right? So you can have, like, for example, you can be running consensus on multiple different price feeds off chain, right? You can have guardrails that are off chain and on chain, right? So I think this is a problem that's like fundamentally unsolvable. I think that's a hot take, but at least given the current constraints of technology, it is fundamentally unsolvable completely, right? But you can definitely put guardrails and have checks and balances in place to make sure that the price arriving on chain or the data arriving on chain is as true as it can possibly be. And truth is also a spectrum, right? So, for a price, if it's a market price feed, right, there's like 50 different exchanges that are supporting trading for that asset, right? There's 50 different prices. There isn't one single price, right? So you have these like different methodologies for arriving on a fair price, right, that these oracles employ, and just other checks and balances that they have off chain to ensure that they're not misreporting a price and the price is as close to the truth as possible.
Yeah, I absolutely agree. I think that at the end of the day, what we do is we try to be as true as we possibly can be, as reliable as we possibly can be, as speedy as we possibly can be. And there is no unique single point of truth that will always be unchangeable. Like this is what she was saying is absolutely correct. And this is also, I think, Jordi, connected to what you were saying before, which is there is obviously certain operators in the Oracle space that operate on these very, very strict guidelines and very strict guardrails. There are others that don't. It's always a spectrum. And what you want to do is get as close to the truth as possible, as close to the correct price feed as possible, as close to trust minimization or decentralization as you possibly can.
Thank you so much. That was very good information. I also wanted to know, because you've talked about during today's call, but now we are seeing lots of RWA strategies bring it on chain, and I wanted to know if there are fundamental differences between quoting on-chain assets and off-chain assets, or they are quoted the same way.
Well, we did talk a little bit about proof of reserve, which is one of the leading, I would say, methods of calculation of a price on a WA asset. A lot of a WA asset, they have off-chain reserves, and so obviously there needs to be a proof of that reserve, and then the price gets calculated based on that. That is, in a way, fundamentally different from a market price oracle, where the price is just derived from DEXs, right? And the different exchanges. So there are definitely differences. I do think that ultimately the objectives are the same. And then we have slightly different types of oracle, as we were saying, and slightly different checks and guardrails. They look at different indicators to determine the correct price based on the asset and on the nature of the asset. I do think that treating a native DeFi asset in the same way that you could treat a RWA is impossible, right? So there needs to be a tailored approach for assets that are backed mostly by off-chain reserves, for sure.
Okay, and then to finish our talk, I have many quick questions for you. For DeFi protocols, it's easy to define a roadmap saying, hey, in 1 month, we are going to be launching this new version of the protocol or whatever. What happens with Oracle infrastructure? Because, oracles have always been there, but yeah, I want to know, what are you building? And what's the difference between RedStone at launch and now?
Big difference between RedStone and launch now, and you're right. Defining a roadmap for an oracle, it is somewhat more challenging than defining a roadmap for a protocol. But I think we have a pretty good idea on what we're doing. The role of an oracle changed significantly. So when we started, I also was a chainlink before, like since 2022. The role of the oracle was mostly providing accurate and secure price data to the different chains. That was the objective for any reputable oracle. Then now that is still a fundamental piece of the puzzle, is not the only piece of the puzzle. What we want to do at RedStone is be the infrastructure provider for institutions, being the infrastructure provider for asset issuers, for lending protocols across both the DeFi and the trad DeFi, like RWA spectrum. I never like to make that distinction. To me, it's just finance, and then eventually we'll all converge into just Fi. But the way that we do that is by providing what we call the RedStone stack. The RedStone stack has got multiple levels, depending on which asset we're talking about or which protocol we're interacting with. Then different parts of the stack apply. As I was touching upon before, we acquired Credora in September 2025. Credora is the leading DeFi rating agency. So their mode and their objective is to rate assets, markets, vaults, and protocols on a scale from A+ to D, based on hundreds of indicators, but they ultimately result into like one single number, one single rating, in a similar way that happens, in TradFi with traditional rating agencies, but with a little bit of a DeFi twist. So it's always an infrastructure play. It's always something that updates over time and then evolves over time as DeFi needs to, and as DeFi rating need to. Because we have MEV recapture from liquidation with RedStone Atom. So explain it very, very simply for the least technical people in the audience, whenever liquidations happen in lending protocols, they're usually performed by bots. And historically, these bots, they kind of fight each other for gas. I call it a knife fight on stages most of the time, where they try to front run each other. So to liquidate the position as quickly as possible to capture this liquidation bonus, right? And there is obviously a extractable value that gets leaked out of this protocol and lost. What we do with Atom is we recapture that within the Oracle, and then we share it back with the protocol through a process of auction off-chain. So instead of these people front running each other, they all bid into the same auction, and whoever wins the auction that gets the right to liquidate, and we take the absorb part of the MEV and we just give it back to the protocol. We now created Settle, which is our latest product, and Settle is about providing liquidity for RWA positions that, by definition, they're a bit less liquid than DeFi positions in different protocols. It works effectively by giving people the opportunity to do instant settlement on these positions through secondary liquidity. And this is something quite fascinating that can really unlock, let's say, a new era, I think, of DeFi. Because most of the problems for these traditional RWA assets are the fact that the liquidity is not immediately available. Usually there is redemption times. They go between 1 day and sometimes a week, or sometimes even a month. So there is obviously friction there that this product eliminates. And we have many more. Like we have IP3 feeds, we have ultra fast feeds on certain chains. We have pool oracles where people can just take the data from RedStone and then transmit it to different chains themselves. So the idea effectively is this, is to take all the different use cases that there are in DeFi and in this new RWA institutional type of finance that is moving to chain, and try to solve them with a single stack, with one provider that is trusted, reliable, and secure, so that people don't have to shop around and have to try and do trial and error on many different things, but they can actually rely safely on one single platform, one single stack that we provide.
Super, super interesting. In fact, in Royco, we are also building this way, trying to give liquidity to assets which are not by definition. And that's why my last question is for Shiv. I want you to please explain a bit more about this new version of the protocol, what we are doing, and also about quoting these new strategies and the difficulties that we could have doing so.
Yeah. So, we just launched our new product, Royco Dawn, a couple months ago. And what that did is it fundamentally took any asset on chain and transformed its risk profile by splitting it into a senior and a junior position, right? And that senior and junior position are composable in protocols like Morpho, so you can get credit against your shares in the market. In addition to, you can trade rates on Pendle. So that was done. It basically took any asset and transformed its risk profile. Now, the natural evolution is to go and try and also transform the liquidity profile of these assets, right? And the way that we're approaching that is by extending the purpose of the junior tranche to also serve as a secondary liquidity facility, in addition to providing that coverage to the senior tranche in the most capital efficient way possible. So that's called Royco Dusk, and it's set to launch in the next couple months or so. Very exciting times. But as we move from these more like, DeFi native assets that existed for the last few years into this more institutional version of DeFi that has these RWAs and, real asset issuers that are more traditional coming on chain, that liquidity problem needs to be solved, and Dusk is going to be one of the paramount solutions.
I'm sure it will. Well, thanks for attending this talk. It's been a pleasure for me. If you want to say something to end this podcast, it would be super, super cool, Mike. It's been an honor. And also, Shiv, last few words for you, please.
Yeah, absolutely. So thank you so much for having me. First of all, I'm very excited about our partnership and the work that we're doing together. Very excited I did take a look on what you are doing on the Royco side, and it's great. So I'm sure that there will be much to come from the both of us in the future and from our interaction in the future. Thank you again.
Thank you, Mike. Nice to meet you.
Yeah, it was awesome, and great hosting, Jordan. Like, this was a very good conversation. I love these podcasts. They are just like a chat between old friends. So very, very nice.
Yeah, thank you so much. Thank you to all audience, and yeah, see you soon. Bye bye.
See you later.